Yes, sir. So, in the previous session, okay, we discussed about the lesser accounting. So, before we before we proceed, we'll just have a quick recap about what we have learned about the lesser accounting. Modification and all, you are very clear. Okay, so remeasurement, when we are supposed to do the remeasurement. So, okay, before that, we just have a quick recap of remeasurement. When we talk about remeasurement, you have to see whether it is because of the term or when we apply the new rate, term or purchase of the outright purchase, when we go for a new rate, and all other instances we go for the old rate, existing rate. Then we talk about the modification, which is remeasurement only you have got a new contract. So it can be because of the term, it can be because of the consideration, it can be because of the quantity. If the new quantity addition is at SSP, okay, this is plus, addition, this is minus, then new lease, no headache. If it is not, then you are going to remeasure. The moment I say remeasure, no P&L, but it is at the new rate of consideration, whatever it is, plus or minus, both remeasurement, but in all the instances of remeasurement, always at a new rate. Now there can be plus or minus here. So if it is a minus, or can be plus. If it is plus, just a remeasurement. If it is a minus, then P&L is going to come. And if there is a plus, no, I missed it here. This link I missed. If there is a plus, but it is at SSP, then not at SSP, then there is a consideration play. But if there is a minus, or if that minus of the term, then P&L going to come by reduction proportion. So here it is a proportionate life, here percentage. That we have understood. That's it. Simple. Then we are discussing about the lesser accounting. Lesser is a normal lesser, or he may be a seller. If it is a seller, then you pass the net investment account debit, which is nothing but debtor, total receivable, to that asset, to P&L. The difference between net investment and the PP. Going forward, he will unwind this. Now, what is this net investment? That is the lease payment, what you are going to receive from the lessee, plus the third party payment. Both you are going to do it. You are going to find out the net amount by discounting both. So when you are unwinding, you will do the both. And what will remain as a closing balance? Always, when you unwind, since lease payments are contractual, third party payment is not a contractual, it is just an estimate. This is contractual. The moment you say, sir, if it is a contractual, is it not 109? Actually, it is 109. A lease investment or a lessee is a financial asset actually. But if you refer the scope of 109, they said specifically, we are not going to account it as per 109, but this will be accounted as a Ind AS 116. It is a scope exclusion. Now, when you prepare an amortization schedule, always and always, because contractual cash flows you are going to consider for that, the closing balance is what this amount is, whatever the third party guaranteed, which is an estimation. Okay, so if it is the dealer, then there is a COGS. This P&L will not come straight away. Instead of this P&L, COGS to revenue. Now what will go into revenue? The amount of present value of this. What will go into cost? The PP value, book value, minus the third party. If any direct cost is there, that is added. But this will be always constant only. And why? Because this is always a fair value. It should be equal to the fair value. That right I am going to recognize. Simple, no? Once you understand how it operates, where the equation moves. Yes, now we will discuss now. Imagine this is a meeting room. CEO, I am the CEO of the company. You are all my staff. I am much worried because I need funds now. For running my business, don't I need funds? So you are all my finance executives, okay? Tell me what I can do. What should I do? I need funds now, say 10 crore rupees. What is your suggestion? Issue shares. Baba, if I issue shares, my control is going to dilute. Are you telling me lose your control, lose this business? Not acceptable to me. Why I'm CEO? Because I'm controlling, I'm the majority holder. Issue share means now somebody will become CEO now. It's as if you are telling, sir, please resign. Sorry, not acceptable. So if you take loan, I'm making my business more risky. Because the moment you talk loan, you are talking about leveraging. My debt equity ratio is going to change now. Followed, no? It's not going to happen. And the more leverage is, my cost of borrowing is going to increase now. Expectation of other shareholders, I'm not 100% owner. I'm only 60% owner. Or probably I'm not owning 60 also. I'm owning 40%. 60% are general public. 110 talks about that concept. Now their expectation starts increasing, then they will dump their shares. My market price will go down. And ultimately, since I am holding 40%, my shares will go down. Not acceptable. You say, sell the assets, sir. You want cash, no? Then what I will run my business with? Sorry? You say, what is the idea? You sell and get back. Oh, what a brilliant idea. Chalo, next year promotion, okay, for you. It must have originated like this only, no? In one room. A great mind, intelligent mind. First time, because this concept was not there. What we are talking now is one concept called the sale and lease back. From the time humanity came 2 lakh years back and all these concepts were not there. It was there. This was an idea. Some brilliant mind intelligently thought, oh, how to do now? How to avoid all this? Accounting, no? Simple, Baba. Your asset is there in the balance sheet which is earning cash. You don't want to pledge it and take the loan. Loan taking means your balance sheet is going to be affected. No new shares, not required. Can't sell the asset. I want cash. Simple. Sell this, get it back, get the cash in the business, and use the same asset, continue to the same asset. It's called off-balance sheet financing. Brilliant. And that person must have got fantastic bonus, whoever suggested this great idea at one point of time. And at that time, do you think when this is devised, accounting standard also ready to counter it? No, people didn't knew that such people will do such type of thing. Only when suddenly they realized, oh, this type of contracts are happening, when whoever IFRS gave one standard, then somebody wrote, sir, in my company, this type of transactions or arrangements are happening. But there are no accounting standards to address this. It can be a genuine transaction. It can be just a book entry transaction. Book entry, no? What happened, no? Loan what you took, you might have converted into lease. You got cash. You continue to use your same assets. See how powerful accounting is. Nobody in the world knows that. This happened here. And people continue to give the money. Their expectations are low because, oh, very good balance sheet. No financing only, no loan only. Very strong balance sheet. But how dangerous this balance sheet is? Followed, no? So we need to address this now. See, we cannot say that, we cannot look everybody from this suspicion. Oh, sale and lease back means you fraud. No. There can be genuine transactions also. Followed, no? There can be genuine transaction. So how to bifurcate now? Like I told you, no, that Hamsa is going to drink only milk, keep water aside. So you can't mix water. No, I don't know whether really it will do or it is mythological or in theory. If you mix water and give to swan, swan is going to drink only milk, it seems. Keep aside the water. So better when you give milk to swan, don't mix. Give pure milk only so that it will drink. No, I don't know, it's said. There is one saying. Followed, no? So don't mix it. That's the message. Okay, so now we need to evaluate the right of control now, concept of a control. Like we'll discuss the theory of accounting, how to do this. Yes, students, so curious to know, no? Curious to know how it is addressed? Okay, just learn now. See, it involves transfer of an asset by the seller lessee. Now comes into picture seller lessee, because he is seller, he himself is a lessee and leased back the same asset, not some other assets. Now the sale and lease back would no longer provide a source of off-balance sheet financing right now, which earlier it was there, but right now no, it doesn't give any compensation to you, no incentives, because you do it, you don't do it. You see how accounting is going to work now. Or if you want to do it genuinely, then no headache. If you really want to do it, do it market terms. Off market term not permitted. Lessees are required to recognize the leases on off balance sheet except election of low value assets, and okay, that if it is a low value, I have given an exemption only. Further, you need to apply the concept of 115 now. I told you already, see, I would have done definitely 115 before this, but a very limited applications of 150. Anyhow, I have been explaining then and there itself whether an account is going to happen, whether account is sale and leaseback is actually sale and purchase of an asset. So we have to apply the principles of 115. Now, as per 115, what we need to check is only one thing, whether the control has passed or not. Now, what is the test for passing of the control? Not relevant right now. We will discuss in 115. If the control is really passed, then you should account it as a sale and leaseback. Means that is a genuine transaction. You have really transferred the asset and you have taken it back on lease. But if at all control not passed, like for example, I have given my asset to you. At the same time, there is one call option also. That means if I want, I can buy that asset back. That means you didn't transfer only, no. Derecognition of the financial asset we learned, total return swap and all those type. So you have to treat it as a financing transaction. That means you should not pass an accounting entry for sale of the asset. Ulta, you need to pass an accounting entry, bank account debit to financial liability. Even though you have got two agreements, one to sell and lease back, standard ignores that lease transaction. Say forget, it's not lease for me. Why? Because you never transferred the control. First part is clear? Okay, now question comes, what if you have transferred the control? Yeah, then it's a sale and lease back. How should I account seller? He is going to derecognize the asset. Yes, obviously, to asset, to PP. Gain on loss of the, you will have some P&L or you will have a loss also, whatever. It should be recognized, transferred, adjusted for off-market terms. If you sell at a market term, recognize it. But if you do set at off-market term, you have to recognize the adjustment. There is one adjustment. Recognize ROE asset to the proportionate to the carrying amount. You cannot, when you lease it back, you cannot tell full ROU because it is on your asset. So you have to take it only to the proportionate and recognize one lease liability. How this works, we will see. Proportionate means, suppose see, previously what you used to do? When it is a normal lease, what is your first accounting entry? ROE asset account debit to lease liability. What is the value? 100, 100. But this time you are going to pass the entry lease lab or ROE asset account debit to lease liability. Lease liability full. But the ROE asset account debit is in proportion to your book value. How this operates, I will explain you. You have to understand the logic behind it. Now, if in case of buyer lessor, you recognize the purchase of the asset, say asset account debit to bank, and then apply your lesser accounting, operating lease or financing lease or whatever. Now, financing transaction, if it happens to be a financing transaction, because there are two things now, it will be sale and lease back or financing. Sale and lease back we understood what type of generalities are going to come. If it is a financing transaction, you continue your asset and pass one accounting entry, bank account debit to financial liability, and you don't recognize any asset, you pass an entry, financial asset account debit to bank. Then see whether it is an off market or at market. Remove that component. L1, L2 inputs, all those things are going to come. Now comes sale and lease back at off market terms. If it was at market terms, things very simple, very clean. But it can happen that it can be at below or above market terms. Now what do you mean by below market terms? Probably the price at which you sell, it is less than the market price. or the lease rent what you pay is different from the market rent. What must have happened? That means, see, first of all, you understand the selling price and the lease rent are interlinked. Agree? If I sell at less than the market price, I will end up paying more lease rent. Oh, sorry, less lease rent. If I sell at more than the market price, I may end up paying more lease rent. Both the parties are intelligent, no, not even fools there to pay. Now, if it is below the market term, then the differential amount will be treated as a prepayment of the lease rent. It is a prepaid rent. And if it is above the market term, it is considered as an additional financing by the lessor. You are not clear. Logic, correct, no? You need to know the logic, right? Okay. Now let us understand what is this, because this is the crux actually. There is only one problem on sale and lease back, and that is this. You have to understand this logic. Okay, so we will go back to our PPT example. So this is the thing. If it is a below the market lease, it is prepaid rent. If it is above, it is additional financing. And the moment above means both are going to get inflated, or both are going to get, because lease rent and your sale price are interconnected. Take one example, understand it very well and answer me. There is one car in my balance sheet. The fair value of this car is 27 lakhs. Clear? Now, I will sell at 27 lakhs only. Why on earth this guy purchased? Because for him, the present value of all the future cash flows coming from this car, because this is one asset, it's going to earn cash for you or for me, whoever it is, should be equal to 27 lakhs. That's why he paid you 27 lakhs. No. Otherwise, is he mad? Now, it is at the market term, above or below market term? At the market terms. Then he will give me one back to me. How much he will charge for 27 lakhs? Because he has to recover 27 lakhs. No. Right now, he has paid you 27 lakhs. This 27 lakhs has to be recovered in an EMI. One EMI cost is 5 lakh rupees. So, by doing this exercise, he has recovered 27 lakhs with the time value of money. Like 27 lakhs he has given. In this 5 lakhs, there is one implicit rate. There is one implicit rate. One rate is fixed. So, upfront he has given you 27 lakhs and he will recover that from you in the form of EMIs. No headache. Everything is fine. Sale price is equal to fair value. Lease rent is equal to fair rent. There is no component hidden here. Now I will take another example. Fair value is 27 lakhs. You sell at 30 lakhs. Now only one thing you should tell me. Going forward, the rent, is it 6 lakhs or 4 lakhs? Can it be 5 lakhs? No. If it is 5 lakh, he can never recover his money back, because present value of that 5 lakh, 5 EMI or 6 EMI is 27 lakhs. What he has given to you is 30 lakhs. Instantly this guy made a loss now. This is called an off balance sheet. So you have given at above the market terms, correct? So how much rent you will charge? So 6 lakhs you are going to charge. Now, what is this additional 3 lakhs? What you gave him in addition to more than the market value? When the sale price is greater than the fair value, the lease payment includes, that means that 3 lakh extra what is given to you, no, that is one extra loan which is not supported by any asset. You didn't sell only to me. Tell me, otherwise I am a fool, right? To buy something worth 27 lakhs or 30 lakhs. That extra 3 lakh is a loan given to you right now. And when you pay me 6 lakh, 6 lakh has got two components. 5 lakh is genuine transaction of lease. And that 1 lakh extra you pay, no, that is your EMI for this 3 lakh rupees extra loan given to me. Makes sense? That's what they say when the transaction is above the market terms. Above the market terms, we have to treat that extra as an additional financing. I'll show you that chart again. I will take you one more example. Fair value is 27 lakhs. I will sell at 25 lakhs. Now he'll say, okay, sir, take this asset back and pay me 5 lakhs. Will you do it? No, is there, sir? I'm not fool here, sitting here. So what will be the rent charge? 4 lakhs. That means when the sale price is less than the fair value, the lease rent, see what happened, no? I should have paid you 5 lakhs. Out of that 5 lakhs, every year, 1 lakh I am not paying you in for future. That 1 lakh's present value, I will prepay you, which is 2 lakhs. Perfect. See, I should have got how much cash? 27. How much actually I got? 25. So 2 lakh is something I told you, look, if you pay me 27, I have to give you 5 every year. Instead, I will pay you 4 every year. It's like same container, security free deposit. What did you do? When you gave a security free deposit, he charged you less rent. What did you do to that rent? Prepaid rent. It's a prepaid rent, no? This 2 lakh is a prepaid rent now. Amortize it now, so that over a period, you end up paying 5 lakhs. 4 plus 1, because you are amortizing the differential. This is fair value. This is what we want to, because fair rent is 5 lakhs. That's why they said this. Okay, I just show you that chart, because you should understand and appreciate it. That's why they say that if the sale has happened below the market term, the differential will be prepaid rent. Above the market term, it will be an additional financing. Now perfect, clean. Yes. So we'll apply that our learning in one problem. This is my own problem. Okay, so we'll try to understand the example. Entity seller sells a building to another entity, seller lesser, buyer lesser, for a cash of 27 lakhs. Now immediately before this transaction, the building carried at a book value of 27 lakhs. That means 27 must be fair value. What you must have done? You must have fair valued it. At the same time, the seller entered into contract to get it leased back with the 20 years with the annual payment of 2 lakhs, payable at the end of every year. So how much I am end up recovering? I will recover 40 lakhs. The differential amount is the interest portion for immediate 27 lakhs given to you. By buying at 27 lakh, I give you cash 27. Now the terms and conditions of the transaction are such that the transfer of the building satisfies the requirement when the performance obligation is satisfied. 115 revenue contract with the customer is satisfied. Now control is our simple layman language, but 115 talks about one language called performance obligation. You have to use that word. Standard says that, the question says that, look, 115 control satisfied. What is this in? And this entire 27 is a sale and lease back. If at all they would have said that this is failed, then entire 27 lakh, you would have passed one simple entry, bank to financial liability. Since it is past 115, yes, you have to account it as a sale and lease back. Now the fair value of the building is also 27. Oh, very good. At market terms. Initial direct cost is not there. 12% is the implicit rate. Buyer lesser, classify it as an operating lease, leave it. Their account will treat it as an operating. That means they don't pass any accounting entry for receiving, pass that, and no financing entries. Net investment in lease and all are not going to come. How it should be accounted in the books of seller? Let's see. Lesser accounting is very simple here. Yes, so right. Solution. Account as sale and lease back. Okay, maybe probably one problem will write the theory. Going forward, you understand it. Because it is a sale and lease back. Why? Because the control has passed. And seller, lessee shall do what now if it is a sale and lease back? Can you tell me? Do you remember? D, recognize the asset, whatever asset you have sold. Then gain and loss on sale of rights adjusted for off market terms. Is it applicable here? No, it's at market terms only. So whatever gain or loss you made, it's actually your gain or loss only. There's no adjustment required for this. Otherwise, what happened? No, you would have shown, oh, I made a 3 lakh rupees gain. Arre, you did not 3 lakh rupees gain. It is a financing there. Third, recognize ROU proportionate to book value of asset. I don't have any problem only because that also you have kept revalued. Fourth, recognize lease liability. Very clean. So you do these 4 things in the books of the lessee. You remove your asset, recognize the cash, you may have gain or loss, adjust for off market terms, recognize the ROU asset since it is your own assets proportionate to the carrying amount, and recognize lease liability. Buyer lesser, what you need to do? Recognize the purchase and apply lesser accounting for operating lease. Simple. Clear? Recognize the purchase of the asset and apply the lesser accounting. Very clean here. Okay, now let us do the accounting part. Ultimately, what I should do? I should pass one entry, whatever I explained. Can we pass this entry? Yeah. In fact, in this, do I need any workings? I don't need any workings. I could have passed whatever I explained. This is the journal entry now. What I explained here is a journal entry. I could have passed that without any working. But let us maintain one format of working. First, financing component. Let us check now, is there any financing component? How do we check? Sale price, how much? 27 minus, very good. Very good. Please think, students, apply your mind. I have explained you what is the logic behind it. Yes, you say, no sir, this is very clean. There is no financing or prepaid rent sitting here in this transaction. Clear? Yes, now let us talk about the second, initial ROU. How much is my initial value of the ROU? Sorry? No, out of that I have to find out the, like, how do you find out the ROU? Is it 27 lakhs? Okay, let us see the present value of the annual lease payment. No, ROU asset comes from the lease payment. Is there any other component, direct cost involved? No, they said ignore it. Is there any, see, we have to just compare 3 elements. Any incentives given, money received, not that. So, present value of lease payment, how much? 2 lakh you pay into 7.47. Present value annuity factor, because at 12% for 20 years. 14,94,000. In this present value, when you have paying 2 lakh, is there any financing component right now? No. 0. So 14,94,000 is your value of the present value of the lease rent. But it is not the initial measurement, because you have to recognize proportionately. Followed, no? It's the present value of the lease rent. If at all, if it was an off-market transaction, on day 1, some amount would have been sitting here, which is nothing but present value only, no? In the previous step, what we calculated is the present value. Like out of 27 lakh, what you receive, something is a financing component. And when you must have repaid it. So you remove from the EMI that particular component. because when you do this, you get the time 0 only. Okay, right here in sale and lease back, if it was a normal lease transaction, you would have passed one accounting entry, RO asset account debit to lease liability. In sale and lease back, how much ROU you need to recognize? Proportionate. ROU is measured at proportion of book value. You are going to measure the ROU in a proportionate to book value. Okay, that means I cannot pass the accounting entry for 14,94,000. It should be in proportion to my book value of the asset, because it is same my asset, no. So what is my ROU asset to be recognized? Can you tell me, students? 14,94,000. If I have to look at the proportion into 27 lakhs, which is nothing but the book value, divided by 27 lakhs, which is nothing but the fair value. 14,94,000 should be in a proportion to my book value as compared to the fair value. So for 27 lakh fair value, 14,94,000 is the present value of the lease payment. For 27 lakh book value, what is my value? 14,94,000. Clean. No, that is the beauty of this thing. When things are fine, things are at market terms, you don't find any difference in the journal entries. Third, we will calculate the gain or loss. My gain or loss starts from where? Sale price. Anything. This is our time immemorial thing. How much? 27 lakhs. In this 27 lakh, is this 27 lakhs fully received for the asset? Or is it something financing is sitting? No. Less financing component, if it is there. Because we would have bifurcated, no. We would have passed from day one bank account debit to financing, financial liability. So 0, not there, not there. So we got 27 lakh. This is pure fair value of the building, or sale consideration received for the building component. I don't say fair value of the building, I say sale price for the building. What I deduct now? Book value of the building. 0. That means I don't have a gain or loss, because this gain or loss is already recognized in my books in the form of what? Revaluation, upward revaluation. So what I would have done? What entry I must have passed there? P&L upward revaluation will never go to P&L unless you have got previous downward revaluation. So what entry I'll pass for this? Maybe say for example, my book value was 20. I upgraded it to 27. What accounting entry I must have passed? Asset account debit to revaluation surplus, OCI. The day I sell, what I will do? One reserve will sit in my other equity. No. The day I sell this asset is no more. Does it make sense to keep that reserve? What entry I'll pass? So reserve revaluation surplus account debit to is it subject matter of recycling or no recycling? No recycling. So it should go to retained earnings. No? Simple, no, Baba. Simple, right? It is very simple. It is not subject to recycling. So it's your gain. But you will not route it through P&L account, but you will take it straight up. Ultimately, whether you route it through P&L account, where it will land earlier? It will land up in the retained earning, no? So you recognize 20 minus 7, you pass a PP account debit to revaluation surplus, and the day you sell this in the name of sale and lease back, you do recycling it to retained earnings. So revaluation surplus is finished. Okay, now let us pass the journal entry. What entry should I pass? Can you tell me? Can you guide me, students? We have done all the calculations which first we explained. In fact, I explained the journal entry also. I did all the working also. First easy thing. Bank. Let us figure out the first easy thing. How much? Undisputed truth. Nobody can change in this world, because in the bank passbook there is one entry has come now. Who can change it? Now explain this 27 times. Why this financial transaction happened? To what? To yeah, loudly. PP. Okay, tell me how much? 27. Done? Oh, okay, that means we have fallen into the trap of same. No, we got the balance sheet, we got the off balance sheet financing now, as if I have sold this asset, but I am continuing to using this asset. Then now how do I decompensate it? I have to remove that incentive. Now how do I remove that incentive? I will bring ROU debit to lease liability. At which value I will bring this ROU? 14,94,000 in a proportion to your book value. 14,94,000. Because you didn't get that, enjoyed that right fully, as if it is a new asset. You are already enjoying it. So that's why I am going to give you recognize only proportionate. If I have removed that proportionate concept, okay, you might have recognized full. Understood? That's it. Simple, no? There's no financing, no prepaid rent, no gain or loss. And gain or loss would have come, it would have been transferred through OCI recycling. You would have passed one more entry if it is there. Are you clear? Yes, students? Okay, now we will have the same problem. We'll have one small twist. Now I will say that, what if the above question, the fair value of the asset is 27 but sold at 30? Now by looking, see, very good. That should, no, your calculation should be so fast in your mind. You need not to think about it. It should strike to you, oh, this is a financing component. Then you are up to date, you are up to the mark. You see, okay, like first we will calculate the additional financing. Financing component, how much? Okay, is equal to, okay, we can write now, it's anyhow, it's an example. You understand it. You write one simple sentence because you have understood it. No, this is an example. Sale price minus the fair value of the asset. Now, how much is my initial measurement of the asset? Again, you start with the present value of the annual payment is how much? Lease payment. 14,94,000. Is it going to change? Lease rent is same. But in this 14,94,000, less financing component is sitting. How much? 3 lakh. That means ROU is only 11,94,000. Because going forward, when you pay 2 lakh, 2 lakh you will pay for two things. No, lease payments are 2 lakh. This 2 lakh is meant for two things. Out of that, one portion for ROU and one portion for the financing. So just deduct it, because this is time 0. This is also time 0. This is for ours. But can you recognize this? No. ROU is equal to, in a proportion to its book value, 11,94,000 into 27 by 27. 11,94,000. See, if you have got a book value equal to fair value, you don't have any headache. Otherwise, you may end up recognizing some gain. You want to do that, and nice, no? 1 year only I'll get it. See, if you do revaluation, it will go to OCI. You want to avoid it. What you will do? Follow the cost model. And when you follow the cost model, when you sell, what you will do? What entry comes? Bank account debit, PP account debit, differential, P&L. Nice, no? This is called double dhamaka. One side I wanted cash, I got cash. On another side, one bonanza came to me. Profit also increased that year. But people doesn't know that this profit I am repaying in the form of lease rent there. It's just a book value therefore, book entry for me. I didn't realize anything. See, these effects should be addressed. Okay, 11,94,000. Okay, same story. I'll do this working. Now, what is my gain or loss? I start with the fair value of the building. Same, sale price minus financing component. I get the sale consideration for the building minus book value, 27 lakhs. 0, no gain or loss. What changed here? Only the selling price changed. So what is your selling price? 30 lakhs. Out of 30 minus financing component. Because 30 has got two elements there. Building, financing. Remove the financing. So you got the building's sale price. Not fair value, sale price for the building. Only for the building. Followed, no? You got the. Now pass the journal entry. I got a cash. How much? 30 lakhs. Straight away to rise to financial liability, 3 lakhs. Out of 30, 3 lakhs I removed it first only. Before this, anything I do. ROU asset, how much? 11,94,000. To lease liability, 11,94,000. To PP, 27 lakhs. To financial liability, okay, 3 lakhs. So I will end up passing this entry. Okay, in this in this entry, what I try to do, I just try to remove that component. In fact, if I had paid less, 27 lakh worth, I would have told it, then I would have said a prepaid rent account debit, that component. I explained you both the things. Yes, now we will move on to the study material question. Same story. Okay, I don't want to read also again. Everything is same. Except, see, you sold 30 lakhs, book value is 15. This is the difference. That means you will have a P&L now. But it should be adjusted for off-market transaction. 2 lakh release rent, 115 passed, 27 lakhs is the building date, 12% implicit. How you are going to account it? Followed, no? Okay. This is, right? This is sale and lease back. And whose books we need to account? Both. Didn't read the question. In both the books. So write seller, lessee. Accounting in the books of seller, lessee. So first we will write this is sale and lease back. Why? 115 control test has passed. So seller and lease back. One, financing component. What is the sale price? 30 minus fair value of asset, 27. 3 lakh is my financing component. Followed, no? Second, what should I do? ROU asset I need to figure out. Okay, second, ROU asset, initial value. For this present value of lease payment, how much? 14 lakh 94,000 minus, in this 14 lakh 94, the financing component is there? Yes, 3 lakh, 11 lakh 94,000. So I need a proportionate ROU is equal to some theory and all will write that is a sale and lease back, so proportionate ROU has to be recognized. 11 lakh 94,000 into book value is 15 lakh divided by 27 lakhs. When the fair value was 27, ROU is 11 lakh 94. For the book value 15, what is your ROU? Because this is going to change your P&L now. Are you clear? So this is the same thing, same theory and all will write. Same story we'll write, and then we calculate it and we say 6,63,333. So I should recognize at 6,63,333. And why do I do this? Because previously I would have recognized big amount of profit. No, I should recognize proportion profit now. Next, gain or loss. Third, seller, lessee shall not recognize gain or loss to that relate to ROUs. See, previously you are using one building whose book value was 15, which was a PPE. Today that PPE name got changed into ROU in proportionate. So since ROU is there with you, to that extent you don't recognize any gain because you have got your own assets. No, if that asset would have completely gone out, you would have recognized full amount, but it came back to you again. So what is the sale price? 30 lakhs. Or you can change it to sale price allocated to building. That also you can do it. Minus financing component 3 lakh. This is 27 lakh is the sale price of building or fair value of the building or whatever it is. You can call by any name. Minus book value. How much? 15 lakh. So you would have recognized a gain of 12 lakhs. Simple. But the standard says, look, you have retained some rights with you. It is your asset. To that extent, you don't recognize the gain. Less gain related to ROU. Can you tell me, students? You do your working. Just tell me, in this 12 lakh, if at all I have to bifurcate, how much I should bifurcate to ROU? Tell me any number, whatever. Then let us see what standard is going to tell. Question is clear? So you made a gain of 12 lakhs. If it's the genuine, you would have fully recognized 2 P&L. But the standard says, look, on debit side, on the asset side, one asset is there. Previously, you used to call him PP 12, 15 lakhs. Now you are calling ROU asset how much? 6 lakh 60. How much? 6 lakh 63, 333. How much proportionate I should derecognize? Huh? 44.44. Now I want an amount. How much is gain related? Okay, I will write one equation here. 12 lakh is for the total. How much gain related if I have to give a bifurcation for the asset sold versus ROU recognized? How much is the breakup? 9 lakh 57 is what? Allocated to whom? ROU. Okay, 9 lakh 57,000. Okay, any other numbers? 3 lakh, 2 lakh 93, 94, 83, 15. See, you got 12 lakh. How? By selling this asset for 27 lakhs. What is ROU? 6 lakh 60 is what you are going to recognize. But how much is the present value of the lease payments? 11 lakh 94. Because 11 lakh 94 is excluding. See, 27 lakhs excludes the financing component. 11 lakh 94 excludes the financing component. So how much is the profit? You say that profit is 5 lakh 3667. So out of 12 lakhs, 530 I am not going to recognize, or 11 lakh, alternatively to cross verify, 11 lakh 94,000 is your lease liability. Can you avoid it? Can you avoid it? No. What you will do? To lease liability, 11 lakh 94. What is your debit ROU you set? Are Baba, how then how my journal entry is going to tally? That's what, no. Alternatively, that proportion is the amount of the profit. In the example number 2, you didn't get this. Why? Because my book value was equal to the fair value. In the previous problem, you didn't get this because book value is equal to fair value. But if the book value is not equal to the fair value, lease liability you are going to credit 11 lakh 94,000. How much actual ROU you recognized? 6 lakh 63,333. How the account is going to tally? So what you do, see, your entry is ROU debit. How much? 6 lakh 63,333. To lease liability 11 lakh 94, because 11 lakh 94 you have to enter. What's the difference? 6 lakh 63,333 minus 11 lakh 94,000 is 5 lakh 3667. This you would have recognized 2 P&L 12 lakhs. No, you reduce that by 5 lakh 30, so that accounting entry tallies. This is called recognition of the gain to the extent of ROU you recognized. And if all these things would have happened, okay, at market terms, your book value would have restated, then life would have been very simple. If you don't do this, you will end up recognizing 12 lakh rupees profit. You recognize, did you sell your asset? No, you are only using it. So I am not going to permit you to recognize full 12 lakh profit. If that day comes, no, then everybody, whenever you are short of profit, what you will do? Sell your asset, get the lease back, finish. No need to change the depreciation, no need to pass the fake entries. Sell your asset, get it lease back, finish, and recognize the profit. Where? P&L account. You are using cost model, no? And can anybody question you? No. Now the standard says, look, I will not permit you. Otherwise, do one thing, do a revaluation. Management says, no, sir, I don't want to do revaluation. Why? The moment you do revaluation, it will not reflect in P&L. It will straight away go to what? Retained earning. Then what is the advantage for me of revaluation? So I don't want to do revaluation. No, sir, I want to keep it in cost model only. Then keep it in cost model, but I will not permit you to recognize that gain of 5 lakh, full 12 lakhs. So how much proportionate? See, for 27 lakh, sale price related to your asset, building, total building. For 27 lakhs, you made 12 lakh profit. For 11 lakh 94,000 ROU asset, how much is the profit? But 11 lakh 94 you would have recognized full, provided your book value would have been up, tagged with the market price. But you have kept your book value low, no, intentionally. Who told you not to keep? You upgrade it, uplift it. That you don't want to do. Why? Because you want one P&L effect there. I am not going to permit that much proportion. How much proportion you recognize? That's why, students, please read. I would have done this problem straightforward, full confusion would have come. What we are doing here? What is this 5 lakh 30? That's why I brought you into this with the two previous example, demonstrating like how a proper fair value transaction would have happened, how a book value uplift with the fair value would have looked like. Then I am coming to this problem. So now you actually recognize the gain 6,69,333. I hope it's clear. It's not which one? This one, 27. It's not fair value. It's the sale price allocated to building. Means, okay, you will take 15 lakhs, 12 lakhs by into 15 by 27. This is what you are trying to do. I didn't get your question. In the previous problem. No, where is the proportionate ROU here? This 11 lakh 94 you are talking. Yeah, that's the previous question. Yeah. This is that proportionate. Yeah, this is the proportionate ROU. What you're trying to tell here? No, no. Okay. This is the what standard says. You cannot take that, because if you end up taking, then you start recognizing more profits. You took 6 lakh, 333 divided by maybe it may work out. See, mathematical models may work. Okay, it also makes sense here. 12 lakhs into 6 lakh 63 333 divided by 15 lakhs. 5 lakh 30,667. Okay, we'll do one thing. No, see, very good. Yeah, and it makes more sense also. In fact, if we look, no, that what you are trying to say, in proportion to your book value, how much ROU you recognize, that much profit will not recognize. This is what you are trying to tell. Makes actually more sense rather than this explanation of the ICA. We'll do one thing. No, next problem, we'll apply this. See, this is what we evolve. Scientists will evolve. They have an observation. Their observation should stand with all the test. Yeah, for me also, whatever your idea makes sense. Very nice actually. And definitely if it works, and I'll work more, I'll definitely incorporate in your name. Okay. See, this is what I say. Please open up your mind. Let us focus on something very simple. Let us try to understand way in a very simpler manner. Then you become very powerful without your knowledge. Good, good. So many batches have fund. Anyhow, rights transferred is 6,69,000. Now, can you pause the video, students, and pass the journal entry? Yes, students. So, yeah, this is work. Okay, we will change this. Next problem also I have verified. So, the proportionate of we can do ROU what we recognize versus the book value of the assets. Very simple thing. You get this. Alternatively, you can see lease liability, how much you recognize, 11,94,000 minus actual ROU, 11,94,000 minus 6,63,000 also gives you same. So your accounting entry will be cash account debit 30, ROU 6,63,000, building 15 lakhs, financial liability 3 lakhs, lease liability 11,94,000, gain or loss 6,69,000. See, 12 lakhs would have come. Perfect. Any mistakes anywhere? I hope you are very clear about this concept. And see, this problem, there's only one question, no? So for somebody, and see, so many fair value of the building component, lease component, financing component, what is the idea behind this? It's very difficult to grasp with one problem there without certain examples or something. This question comes in the examination. And again, since the problem is difficult in the study material, like logic is very difficult to figure out, the probability of this problem coming as it is in the examination is very high. They could have twisted it. Instead of sale at 30 lakhs, you can give sale at 25 lakhs. Have they given any examples? Not given. Like prepaid rent. You know that logically I have to write prepaid rent. But how this entire calculation is going to change? We don't have any precedence there. But they don't do it. Understand? They are still considerate. They keep CA final student in mind when they design one question paper. Yes. Now, how do we understand this? See, generally, genuinely 30 lakhs, 2 building, 2 liability, 27 lakhs. This is the entry. I would have passed one more entry, ROU to lease liability. Then the proportionate of this, I recognize gain on ROU to ROU. Follow? Yes, students. So now bifurcation of monthly rent. Okay, right. Fourth point, number 4. Bifurcation of rent. Because when you pay the rent, you have to prepare 2 amortization schedule. One is lease schedule. Because lease liability balance you should get. ROU asset, lease liability. One more is financing component. Financing component balance, because disclosures are going to change now. Payment towards finance portion. Okay, can you tell me, students, before I proceed, can you tell me how much is my payment towards finance portion? How much is my payment towards lease. Total should come to 2 lakh. You need to tell me how much financing, how much is lease. Understood, no? Total should come to 2 lakhs. For what present value you received, you are paying 2 lakhs. You receive 2 lakh, you are paying 2 lakh every year. What is the present value of the total cash flows? 1494. So you say 2 lakh into, okay, whatever it's financing. Now I'm taking financing first. 3 lakh divided by 14 lakh 94,000. 40,160, whatever it is. But you would have taken, and I will take this as a balancing figure. Whatever it is. So if you would have taken lease first, you would have got 150, 840. And the financing portion would have got it as a balancing figure. Okay, Prithvi? Speed is okay. Are we done? Can we move to the next question? Or in this process you forgot? There's one more question pending. But remember, in exam also, don't leave it. Again, go back to the, after you finish the solution, my suggestion is go back to the question and see it. It might have forgot, like it may hardly fetch you 1 or 2 marks, but you might have forgot it. So right now, buyer lesser. Recognize asset. Apply lease accounting as operating lease. You say that apply operating lease account. Apply operating lease accounting. Recognize the asset and apply operating lease accounting. So what entry I should pass on day 1? Buyer lesser. Can you tell me the journal entry? Building account debit, how much? Sorry? Confusion, no? Keep it pending. Let us see other easy thing I'll do. Bank, which nobody can change in the world. Others are subject matter of our valuations, no? Now tell me. There's one financing component. What it is for me? Financial asset. How much? 3 lakh. Then? That's all. Is it not a fair value? Present value of that, what is at the fair value only, no? Even though there is a component of financing, you remember the first in PP, first problem what we solved. What is 27 lakhs? Present value of the, it's a cash price, no? First problem of deferred payment. It's actually deferred payment now. For 27 lakhs, you are going to get a deferred payment in the future. See how interconnected, huh? And after that, you are going to receive 1,59,000 lease payment, which you take to P&L account. 40,160 you will take to amortization schedule. And on this you recognize interest element now at the discounted 12% rate. Going forward, when you receive cash 2 lakh rupees. But how do you account that 2 lakh rupees? Bank account debit, but credit is problem, no. Why 2 components you added there? So, and you are doing operating lease, one of the component, not a financing lease. If financing lease, then again net investment in the lease to all the stuff, things would have happened. Again, interest income would have come. Simple. Don't get into that. It would have been more complicated. If again I would have got, like I have purchased asset from you and again entered into finance lease, then what would have happened? Lessee, how they will treat? Understood the question? See, you are my lessee, I am the lessor. You have sold the asset to me, and again as a financing loan, a financing lease, it has come back to you. Then how do you account? You will account it as a financing transaction, because control never transferred to me. It failed, no, 115, because you are going to get your asset back again. Since it is an operating lease for me, you treated it as a sale and lease back, because control came to me. That's why I recognized the building here. Otherwise, I would not have recognized the building only, in my books. So next time when I receive the lease payment of 2 lakhs, 1,59,000 straight away I will take to P&L account. But the balance 40,160 I will not take to P&L account. Why? For that 3 lakh I have prepared an amortization schedule. And this 4160 is the EMI payment for that amortization schedule, and the financing interest only I will calculate on that. Perfect, students? Clear now? And this is what exactly we do. So I have seen 10 years, I was fortunate to be in one company. Otherwise, what would have happened if I would have continued teaching immediately after I have qualified as a CA? First of all, I was a bookish all my life till I went into a company. I would have continued that only without knowing how practically things work. And again, I'm sometimes I think back, I was fortunate to work in IT department. Now, IT department, what happened? No, it's like you have to talk to purchase department, you have to talk to sales department, you have to talk to accounting department, because everything happens in system. As a core team member for SAP, so I could see how that thing interacts, how the purchase order is interconnected with your journal entry for the Miro. I was able to connect, not there, only after now, after I came out. There what happened? Only work full time, no time to think only. Okay, so now I could understand, oh, okay, this is what they are doing, this is how it happens. Because I also, during my time, we had to purchase computers. One vendor offered me, sir, shall we do something like lease transaction? Then there I had to figure out the component. At that time I didn't realize. Now I am realizing, oh, that is this concept. So understand, students, what you are learning, ditto, dot, you are going to see there outside in your companies. What we are learning is a simplified version. There you will find a complicated version. Don't worry, you have got experienced chartered accountants there under whom you will be learning. It's not that you on day one only you are going to become CFO. But you have to do that. Executive job you have to do. Followed, no? Yes. So take out question number 23. I don't want to read. You only read it and do it. Please pause the video, students, and complete this work. Yes. Was there any differences in this question? Any oddness? Venus is the seller lessee. Only thing they asked you entries in the books of the lessee, not the lessor. Venus, 28 lakh is the cash, 13 lakh is the cost, book value, please rent 2 lakhs, 115 test passes, 12%. Oh, and they gave you this 11 lakh 40, 94 also, 14 lakh 94. And 25 lakh is the fair value of the building. So you must have written, considering the fact it's the sale and lease back transaction. So first your additional financing will be 3 lakhs. Then you will calculate, I'll proceed further. You check the ROU initial measurement, 14 lakh 94 minus 3, 11 lakh 94, 14 lakh 94 they only gave you. So you are going to take the proportionate value to the book value. So you take that proportionate value comes to 6 lakh 2880. Then gain or loss on the sales, seller shall not recognize the gain or recognize the gain only to the extent. So I have changed it. Okay, when you practice, I have given the proper, because fair value 10 places if you see, you get confused. Sale price of the building, not the total sales price. Total sales price has got a component of 3 lakh that you removed. You got a sale price of the building only. You removed the book value, you got the gain. Gain related to ROU asset. Okay. idea given by Kriti, recorded permanently, okay. So 6 lakh 20, which is the ROU value divided by the book value. Very clean understanding. So you get this, rights transferred 6,26,880. So you pass the journal entry, cash account debit, ROU asset account debit, building account credit, 13, lease liability, gain asset transfer. Perfect. How many marks question? 8 marks. Should you touch this question? Yes, exactly. This is a procedural question. One question like this for 8 or 10 marks will be sitting somewhere. But to attempt that, which you don't know what it is, you should have gone through everything. And to go through everything, you have to, again, the top priority to give the complex problems. Because complex problems becomes a procedural problem. Easy problems will become conceptual problems in the exam. Yes, with this we have done with the lease accounting by the lessee, lessor. Now we will move on to the last aspect called the transition to Ind AS 116. Because before this, there was one more Ind AS on lease accounting. Understand? This is the second Ind AS. That Ind AS got scrapped. Can you understand? Can you believe? One Ind AS got scrapped and one more Ind AS came, which is applicable from 1st April 2019. So how the transition should happen now under the new concept? Because that previous Ind AS was something very similar to our old accounting standard. This concept of lease was not there. Okay, so let us try to understand the theoretical part of it.